Welcome back to the stage program. Excited to be moderating this panel. So we have two amazing people here. Brian, who's the Managing Director of Techstars, and Philipp, who's the CEO and co-founder of LI.FI. Before I'm framing the panel a little bit, I would like to give you guys the opportunity to introduce yourself.
I guess I can go first. Honestly, I don't know why I'm here. I'm like literally unemployed as of like last week, and I know nothing about crypto. So, but before that, I've made 70 plus investments over the past 3 years. Mostly, not necessarily crypto companies, but there's been a few. We've invested. Techstars has invested in Arweave, which I'm sure a bunch of you are familiar with. Sam's been very good to us in terms of coming over and spending a lot of time with our programs. And we also invested in Chainalysis. My claim to fame is Johnny from Chainalysis slept on my couch one time. But that's all I know about crypto. But I'm here to share a bunch of learnings about building companies, about finding product market fit, about solving real problems that your customers are having. And I think that's most important, whether you're a Web3 or now a Web4 company. So less hype, more product market fit.
Yeah, hi, I'm Philipp. I'm a serial entrepreneur. I've been building in gaming and biotech, and now recently in crypto. So 21 we built LI.FI. It's a multi-chain crypto API, and that trading API nowadays is implemented in all the major wallets from MetaMask, Phantom to Robinhood, Binance, and we have been raising $51 million. So as a German company, that's quite a lot. We are 80 people now. We have closed around 600 deals in the space. So we've been growing pretty fast, and we have a good understanding. As a meta-level aggregator, we see a lot in the space because we cover all verticals from above and from below. So it's very interesting, and yeah, looking forward to talk about venture building.
Amazing, yeah, and you said it there. So venture building is the topic that we want to chat about today. The basic idea behind the panel was that we have a lot of builder programs, a lot of grants programs, a lot of accelerators, VCs, etc. in crypto, specifically from ecosystems. And the hot take here is that we're having a venture output problem. So it seems like we have a lot of ideas, we have a lot of projects coming out of builder initiatives, but the real ventures, like actual companies with product market fit and a working business model, feels like crypto is still struggling to create these en masse. And so I'm excited to have somebody from the accelerator and VC side and then the founder here to discuss that topic. Why is that? Is that true? How do we feel about that? And before we dive into that crypto-specific question, I would like to ask you, Brian, just high level, zooming out. It's a very generic question purposely. You've been with Techstars 10 years. How many companies did you screen? How many founding teams did you talk to? What is your estimation in these 10 years?
Oh, thousands. Thousands. Literally thousands. Every program we would screen about 6,000 companies, probably speak to 800 on phone calls, and then narrow that down and down and down and down until you get your top 100, and then you go really deep on those companies. But screen thousands of companies, yeah.
And what's the three most important things you think you look at? You look into when you talk to these founders?
This is like the earliest stage founders you can think of, right? So the three most important things when you're investing in super early stage companies, no matter the domain, is team, and team. And I mean, I think that's pretty much the only thing that matters at this point in time. I mean, ideas will change, companies will pivot, markets shouldn't even exist if you're doing the right thing yet, right? You should be creating a new market. It's just about the team, and will they have the grit, the determination, the vision and the passion for what they're doing to keep going, right? Even if everything is slapping them in the face, they're going to just keep turning up and pushing for it. So team, the only important thing.
And I know the Techstars is not necessarily really focused. I mean, I think you guys do have some crypto
in Dublin.
Programs
there's a
well,
crypto program, yeah.
But so you personally, what was your exposure? Did you see a lot of crypto companies? What is your outsider view on crypto companies, crypto investment opportunities?
Yeah, I mean, I would say, again, team. If you've got very passionate founders working on, clearly identified problems with clearly identified customers, fantastic bet, right? If you come against, and I've invested in some of these companies, we won't name their names, but they're just flashy marketing, flashy website. It's like, how many customers are you speaking to this week? It's not important to them, right? So I think if you have an obsessed founder, obsessed over your customers, there's no real difference in the types of companies that you back on there. But unfortunately, we had a big wave of let's hype the shit out of this, get people excited. They're just not investments that anyone should make, whether you're a retail investor or an early stage VC. Usually don't turn out to be good long-term investments.
But when we had a conversation and I asked you to join today, you were quite explicit on your feeling towards crypto ventures and investments there that you apparently haven't done most of the time. It's like, what's your take? Like, how do you? I would say you're a Web2 accelerator program, probably the leading one next to Y Combinator. So what's your view on crypto companies? Like, how do you perceive the scene that we're all part of?
I don't make many investments in the space because I don't know enough about the space to be like, all right, I'm going to go deep and be a domain expert. Like, there's other people that do. I invest in other things, Web 2, but I think we've also moved on to Web 4. Sorry to drop another term on you, but the production and the productivity that we've seen from LLMs and Gen AI is just mind-blowing. And my biggest problem is I just haven't seen those 10x outcomes or those 10x improvements in day-to-day lives in the crypto world, unless it was, the bull runs of fucking Shiba Inu or, whatever it was. I had all my friends getting in on it. That's a scary moment. But listen, crypto, I think what we're seeing with stablecoins now, we see the acquisitions of Privy and Bridge from Stripe. This gives them access to new markets that they didn't have access to before overnight, right? And I think this is very, very exciting. And hopefully we'll see a lot more exciting outcomes like that. And you should really pass the exciting outcomes to this guy because he's the one who's working on those exciting crypto outcomes.
Yeah, Philipp. So what do you think about the venture scene in crypto? You said you've been a serial entrepreneur. You've been in both worlds, basically. What is your honest take on the crypto venture world today?
Yeah, I've also been I have been a huge critic, actually. I came to the space. I luckily found a big problem to solve straight out of the gate within the first month. And 4 months later, we have raised 2.5 million seed. So that was all very quick. And a year later, I found myself questioning the space, like, why are we doing this? So I spent a lot of time thinking about that. And I think we have to zoom out a little bit. Why crypto? In general, if I look at the global financial system today, the global financial system has been growing organically and as such inefficiently, and it's siloed and it's convoluted, and it has been growing like any nation state, right? We could argue that the German nation state is very inefficient the way it works, or other companies or other countries as well. And the financial system is as inefficient. So the idea is, okay, if you would bring humanity together, so one thing is communication, so the internet came. The next thing is trade, right? What brings humanity together is trade. And trading, no matter what, needs efficient rails. And if we were to rebuild the system, we would want to have a system that is decentralized, can't be corrupted, can't be censored by any nation state. So the blockchain comes into play. It's the perfect technology to build this new financial system. And this is what this space aims to do. That's one of the things it aims to do. Now, looking at that, or going with that huge opportunity, and looking into the past year, we had like a $4 billion venture capital overhang. That means there was like $4 billion in venture capital ready to be deployed, but not enough ventures to fund. That obviously invites a bunch of short-term thinkers and actors. So naturally, there's a lot of trash. Also, where there's a lot of money to be made, there's a lot of scam. And now with the financial system has always been full of scam and value extractors across the board, right? It was just harder to pinpoint down what happened, and now on the blockchain everything is transparent. It's very easy to pinpoint down. Here's a hack, here's a scam. And also that. So this is the problem. So the space, because there is so much money to be made, is very scammy. Like any space where there's a lot of money. If you talk about rare metals, that's scammy as fuck. But you know, we just can't point fingers at it. So is the financial system. So that's what I like to set up as a stage. And then there are two types of companies. There is the type of Web3 company that builds for the space, the people that are within it, typically DeFi protocols. They build money markets, like lending protocols and all of that. And they build for crypto native users. This space is, in terms of amount of market participants, still very small. So as a Techstars, I would look at it and be like, no, I don't understand that, and how fast is this going to grow? Is this a 10-year project? Probably not, right? And then there are those that build on top of these crypto rails, and they're trying to build for Web 2. And there you could argue, well, is this the right time, right? And now it's shaping up with the stablecoin craze we see right now. Everyone launching stablecoins. We could dive into that. I'll stop that for now. But like, yeah.
Super interesting. Is it? I'm wondering though. Is it a founder problem too though? Like when you guys look at the founders, the teams, your peers, or the founders that you're like, is it an? What do you think about these? I'm saying that, and I'm doubling down on this. I feel like it's a pretty young crowd typically. I feel like it's not people that have 10, 15, 20 years of experience in corporates or consultancies. Like it's just a very different persona. Very different persona. So I'm just wondering if is that a factor, and how do you see that take?
It is a huge factor. Developers in crypto, builders in general, or software developers that aim to become founders, are generally very, very young. Like even our angel investors, when I was raising our seed round, and we were like we're going to go back to that later when we talk about growth, but we were very strategic about that. We wanted to have as many developers on our cap table as possible, and we built a vehicle that makes that possible as well, so that we get network exposure to grow faster. But plenty of these angel investors were like 21. I'm like, what? How can you afford to invest 50K? And like, okay, was the exception maybe. Was not. Like, people are very young, but that obviously comes with first-time founder issues. Very inexperienced founders, or maybe they know how to build a product, but not how to execute a company. And these things definitely play a huge role.
But the one thing I would say about young founders is they have this amazing level of naivety, right? So like, you need to be naive if you're going to believe that you can go out and change an industry, you're going to create a new category. Because if you've been through the founder's journey a couple of times and you've burnt your toes, you're going to be a lot more skeptical of what's possible and what's not, and you're going to be a lot less shameless. And I think being shameless is super, super important for founders, right? That you're going to send that email, that you're going to send that message to the investor, you're going to knock on that door. You're not going to continuously think about what's this going to do if they say no? What's this, and young people have that in abundance because they haven't been burnt already, right? So that would be my call to people of all ages when I'm starting my next thing now. I want to be more shameless.
More delusional?
More delusional, because that's what gets you to a certain point in your career, right? And then all of a sudden you've got this like self-perceived sense of importance, and you're afraid to send that message because, what if they say no, or what if my ego gets hurt, right? So be shameless, be naive. Hopefully you've learned a few things along the way. If you're not 21 anymore, if you're 21, just keep doing what you're doing and just keep pushing boundaries.
When it comes to fundraising, I would say stay delusional.
Stay what?
Stay delusional. I'm 35. I'm still delusional as fuck. There's no other chance to raise more money.
Awesome. So I want to double click a little bit on the building process and what you've learned, Philipp. What would you say are maybe first of all give us an idea about the size and the scale of LI.FI today, and can you share some insights about let's call it the scaling principles, the learnings from scaling a venture within crypto. What is the size, the traction of LI.FI, and how have you scaled? What is your recipe?
Yeah, so LI.FI has closed around 600 B2B deals over the past 4 years, whereby many of them are not alive anymore. speaking of sustainability of ventures in crypto. We are processing around $3 billion a month in transaction volume, and that across like hundred thousands of users across lots of B2B partners. When it comes to growing company in crypto, it is a tough one because, for example, most paid channels are just not allowed. It's just crypto has not been regulated, so therefore you can't make use of paid channels. So your way to grow is as organically as possible. We had a very traditional core focus, which I'm coming from B2B software as a service, so high quality content marketing was our way to go. I came into the space and was like, okay, looking at the space, it's easy to be better than others, honestly. You come as an experienced founder into the space, you look at what's happening, what people are doing, it looks shady and whatsoever. So how do I stand out? Well, I provide value with the content I'm creating, which is a very old mindset from B2B SaaS 10 years ago, but in crypto as a new vertical, it still works perfectly fine. So we focus on that, and then we focus on cross-pollination. What I mean by that is that we use each and every integration we did, no matter if it was like a little shitty API at some point in our back end, or it was a new client, we had a very clear process on how to do co-marketing. So we would say, today we tweet that partnership, and then a week later we would write that blog post. That blog post was written in a way that we can actually take little excerpts of that and retweet that again, and then a week later that partner would post a blog post and tweet about that, and then the week later we would do a Twitter space on that. So content recycling. Content recycling and cross-pollination, so growing across communities. That was our strategy, and it worked beautifully. At the very same time, another big problem is that typically you can somehow say, where is my target group? You try to find your target group and you go from there. So crypto only happens on one single platform. It's Twitter. It's not happening on LinkedIn. You can do your personal branding on LinkedIn and appear to some Web2 VCs and maybe even TradFi, but there's no business for you. You have to be on Twitter. And apart from that, it's a very global industry, so it was very much growing via events. And I've spent the past 4 years out of my suitcase. That was very exhausting, but worth it, because especially in a remote world, the personal touch is a competitive advantage. It really is. A verbal commitment on Zoom, worth nothing. Having a beer, talking, liking each other, understanding, that guy has kids, and knowing a little bit about each other, that builds relationships, and that is so worth so much in a world or in a vertical where trust is a big issue. Yeah.
And I know that being a CEO can be is a special position. It can be lonely. So I want to get personal. What is like within you, like having built in both worlds? What is different? What feels different? Is there anything that really feels different as a CEO, as a founder, building within crypto? Is there anything where you'd say, yeah, I didn't expect it to be like that. This feels better or worse compared to any Web2 venture that you've done in the past?
Yeah, as mentioned, the first year I had a hard time finding purpose and meaning in what I'm doing. I know that I was solving a big problem for the space, but I need to find purpose for the space. So I was questioning that a lot and had lots of conversations. But eventually I got there. Another big thing is that scammy behavior from different market actors, it's not only reduced to certain scammy persons. It's like you hire people and they have 5 jobs at the same time. Talent scarcity is a big problem. So you hire some Indian guy and he performs well the first 3 days. And then you realize he's been working for 4 companies, charging them 10K each of them, making 40 to 50K a month. And it's just because.
Fair play to him.
So we are 80 people remote. We are a remote company. So it was tough to build all the processes asynchronous, making experiences with different time zones. What can you hire in different time zones, what not? And all, like, the learning curve was much different one. It's a day one global company, essentially. And that also comes with regulatory issues, employment issues. There's so many things we had to figure out from scratch. I felt like a first-time founder in many ways. And then, yes, as I mentioned, I think it is absolutely crucial, and funny enough, especially German founders don't get that. You have to meet the industry at those conferences. This is where deal making is happening. That's where you find your investors, global ones. We have from $51 million, maybe 1 million is German. We have raised everything abroad.
Who invested that from Germany?
I think it was Ocean Investment, Jan Beckers.
Okay.
Yeah. So that's essentially it. And it was definitely very lonely. We spoke about that in private, right? No, in public. No, it was very lonely. It was a very lonely journey because this year alone, I was in 15 cities already, but globally, from Asia to the US. And I'll keep on doing that for the next year at least. Like we are now 80 people, I can slow down a bit, but it's absolutely worth it. As a CEO, as a founder, you get invited to much better dinners, much more private circles, and you just meet decision makers on different level than your sales rep ever could. And that's a realization.
Cool, thank you. I wanna, we 25 minutes fly by, but I wanna go back to the builder program perspective briefly, and it's my take, but I feel like from afar, and I'm not running one, so maybe it's not fair to judge it like that. But I feel if I look at the space, a lot of the programs that are there, like they fund ideas and that's it. Like hackathon ideas get like some grants and then they just all vanish. So this transition from an idea, is it an idea? Is it a project? Is it a product? Or is it a business? I feel like a lot of top of the funnel stuff going on when it comes to like, let's call it venture sourcing in crypto. At least that's my observation. Fuck, sorry guys.
Thought that was me. I'm happy it was him.
That's actually, it's my son.
But hey, listen, I think it's good that those programs exist, right? That there is some money, there is a little bit of a catalyst to get going, to get started. There is a little bit of a, kick out the door because, huge companies start with a great little idea or a fun weekend that you hack together, right?
I didn't finish my question though.
Okay, go on.
My question was, what is your observation? Like, how would you describe the path? Like, what is integral to building these venture sourcing programs? This is what I'm calling them now. From like after you have a great team, they want to do it. What is the playbook and the framework? Like, what is the core stuff there that Techstars had to provide? That Techstars was integral for these founders to get them from project idea into like a product and then a business. Like, what would you say from a Techstars perspective? What was integral for you guys to provide to these founders? Like, how do you get them further?
So yeah, I think it's great that these programs exist, and it's great that there's some money that gets them at the door because great companies are started with like a little spark of an idea. Techstars, I don't know if anyone knows Techstars, but it was founded like 18 years ago in Boulder in Colorado. At the same time, an event called Startup Weekend was born. They later merged. And, companies like Zapier, or Zapier if you're American, Rover were born out of weekends like Startup Weekend. And, Techstars has invested in like 4,500, 5,000 companies now. Many of which are, true to roof unicorn companies, a lot of them unicorn companies. Techstars, like honestly, early stage companies back, it's money, right? You're looking for some money to get going. Most likely if you're going to an accelerator program, you're a first-time founder. And for me, like I'm mostly focused on outsiders for outsized returns. I do not want to invest in founders who, like especially in the context of a Techstars program, I don't want to invest in founders who know all the VCs already and know how this game works, know how to raise money, know how to because there's something terribly wrong with your company. If you know all of that, you've done it before and you still want to come through a program like that. The best founders are very, very technical. It gives them some structure. And we teach them the rules of engagement, right? We teach them the rules of the game. If you don't know the rules of the game, how to raise money, how to win your first customers, you're not going to win, right? So if we teach you how to play the game and how to win, you've got a much better chance of being successful, right? So yeah, I think programs like this, definitely for first-time founders or maybe first-time in this industry founders and you want to build a whole bunch of connections, fantastic. If you have all those connections already, all the investors, you've built companies before, get building, right? Go win some customers. But if you don't, I think a program like that is fantastic.
Awesome. Yeah, we're nearing our end here when it comes to time, unfortunately.
Just out of curiosity, who's building a company today? Who's raised money for the company?
Not many, actually.
Who's building in crypto?
There's more people building in crypto than building companies. That's,
that's what I said. We're stuck at the idea stage. All right. Yeah, we need to wrap it up close soon. But so let's be quick. Philipp, what is one thing that crypto founders should stop doing?
He said be quick.
Yeah, good question. They stop building short-term stuff. They need to ask themselves, what is going to be a problem still in 2 years from now? And if you don't have an answer, do something else. Because I believe as a founder, your time is so precious. You have the willpower, you have the chip on your shoulder, whatever it is, you have the drive. You want to get things done, you want to change the world, and somehow that's such precious energy. And you want to use this and invest this in the most careful way possible.
Cool. Brian, what needs to change for you to be more bullish on crypto ventures? What do you need to see?
Obsession, and that's all it takes is just obsession. Are the founders ask yourself that you're building a company? Am I absolutely obsessed with what I'm doing? Can I think about nothing else? Am I borderline psychopathic when it comes to thinking about this business on a day-to-day basis? If you're not building something that's true to yourself, go build something else or go get a job. But just be obsessed with what you're doing. And even if everyone says that's the most stupid thing I've ever seen in the world, if you're obsessed with it and you're building it for yourself first and foremost, fantastic. Keep going.
Amazing. Do we have time for one or two questions or need to wrap up? All right, no Q&A for you guys. You need to find these folks in the networking area. Thanks so much. Thanks, Brian. Thanks, Philipp. That was amazing.
Thank you so much.
Thank you.